So we all know that yesterday, news-wise, the Fed dropped the interest rates by another 0.25%, okay? And that was good for the market. Everybody's happy about it. I think that the cut was baked into the market, but nonetheless, the investors within the market were very happy with it, drove the market up higher yesterday. Now, let's go into what's going on today. What's going on today, let me go down here, hold on, there's my mouse, there it is. Let me pull up the homepage here as well. You'll notice that all of our major indices are down today. Today, the market is taking a breather after the Fed did cut the rates yesterday. The Dow is down 226 points, down about 0.8%. That's what's leading the charge to the downside today. The NASDAQ down about 0.5%. The S&P 500 down 0.6%. So is the VectorVest Composite. For those of you who are new, the VectorVest Composite is an indexed arithmetic average of all of the stocks that we track. And currently we're tracking 8,270 stocks. The average price of all of those stocks today right now is trading at $47.97. Now we take that price and we track it on both a week-over-week and day-over-day basis on the color guard right here. The color guard tracks 3 of our market timing indicators, and when looking at the overall market situation, use the color guard like you would a traffic light. The main color you see mostly is yellow, also by way with the green. Man, Joey, you making all of my gray pop up on the screen. Holy smokes, I look super old. Sigh. Anyway, the price of the VectorVest Composite is the price movement of that indexed arithmetic average. RT looks at relative timing, which is the short-term price trend of the market. This tells me if the market is in an uptrend or not. And the buy-to-sell ratio, which looks at the overall health of the market. Currently, it's above the value of 1, and that's because currently we still have more buy recommendations in the software than sells. So the market is still showing signs of strength, but notice how the buy-to-sell ratio is falling over the last week-over-week and day-over-day basis. So the market is still showing signs of strength, but it's dwindling. RT today is at red. Why? Because the indicator has fallen on a week-over-week and day-over-day basis and below the value of 1. So the short-term trend of the market is giving us a red signal right now. The price composite is at yellow because the price is risen on a week-over-week basis and fallen on a day-over-day basis. The data is mixed, so we assign a yellow tile. A lot more, not a lot, but more yellow in the color guard than green. The market is saying slow down right now. Slow down. Good afternoon, Alessandra. Saying slow down, all right? So based on that information, what's pushing the market to be this way? Well, let's do one other thing before we do that. Let's go over to the market timing graph and let's take a better look. So the Fed talked yesterday. This is looking at that VectorVest Composite now shown in candlesticks over the last year. We can clearly see when the market's trending higher. Move this over a little bit. When the market's trending higher, when the market's trending lower, and when the market is moving sideways. I'm going to put this on a 3-month graph. Here's yesterday's candle. Yesterday's candle up day, but it did come back off of its session lows. The market was moving down earlier in the day. When the Fed came on about 2 o'clock, it dipped just a little bit more. And after about 2:30, when the Fed got on and started talking during his conference, the market started really moving higher. Very little wick at the top, strong up day by way of candle, but it did show some volatility coming off of the session lows. This candlestick pattern right here is known as a hanging man, and it is a possible reversal pattern, which comes to fruition today with follow through. So the market is taking a little bit of a breather, but if we look, coming off of this low of 10/8 of 2019, the market is definitely trending higher. We're looking at 2 moving averages, which are the 3 and the 8 exponential moving averages. And even with today's down day, the moving averages are still bullish. They have not pulled bearish yet, but is a decent down day as we saw on the homepage. Now, looking at the homepage, looking at the market timing graph, let's get into some news of why the market is moving the way that it is. I'm going to go into the news. Let's start off with the consumer confidence unexpectedly falls, hitting a 7 month low, and that was a couple of days ago. The consumer confidence of 125 versus 128 and 126 in September. The present situation, index at 172 versus 170 and revised from 169. The present situation index improved, but expectations weakened slightly as consumers expressed some concerns about business conditions and job prospects. So taking that in consideration with what the Fed did yesterday in lowering the interest rates, we're getting a feel that the market might be, our market is still the best globally, or one of the best globally. If you look globally, many of the markets that are in the global market are getting very close to recessionary terms. Ours, in this particular case, is not. And my personal feeling is you lower the interest rates to boost the economy. But right now, the economy is still doing good, but we're still lowering rates. And listening to Jay Powell yesterday was saying a lot of it has to do, or some of it has to do with the China-U.S. trade, how what's the word I'm looking for? Not sketchy, but not inconsistent, but good word the one I want to use. Well, they're unsure. How about that? That's probably the best terminology that I can use for lack of a better word. There's still some uncertainty about how this will roll out and when it will roll out, and taking that into consideration, that's affecting the market and so the consumer confidence going along with the Fed decision to lower rates is what's going on. So tell you what I'm going to do, and I haven't already done this, so you get to see how to make this happen. I'm going to go back into the software. I'm going to go to the Viewers tab, and what I normally do is I normally create a watch list prior to Trending Thursday. So I'm going to build it for you as I would normally do it now. So I'm in my folder for Trending Thursday. Here's all of the stocks or watch lists that I've created since we started doing Trending Thursday, okay? I'm going to click on New, and I'm going to click on and make a new watch list. Move this over. My new watch list will be called Trending Thursday, and today's date, 10/31/19. All right, so now normally what we always start off with is what's going on in the market. So we're going to look at two indicators. I'm going to add them to the watch list, the VVC and the SPX. Or I could do the spiders. I'll do the spiders today. All right, so these are the two things that people look at to see what's going on in the market. We're going to look at the VectorVest Composite because remember, the VectorVest Composite tracks the movement of over 8,200 stocks. And currently right now, everything is down on it. The RV, which is the short-term, which is the long-term price appreciation potential of the stock is below the value of 1. The safety of the VectorVest Composite below the value of 1, and the relative timing of the short-term price trend of the VectorVest Composite below 1. But on the other hand, the spiders, because it's an ETF, the RV and the RS will always equal 1. But the spiders does have an RT above the value of 1, which tells me that the S&P 500 right now is still in an uptrend right now. All right, CI shows me that the spiders goes up more than it goes down compared to the VectorVest Composite. And the earnings of the VectorVest Composite sitting at $1.20, growing in their earnings on the basket of 8,200 stocks at a rate of 4% a year. On the spiders, we don't have that information because it is an index. All right, let's take a look at the graphs of these two. And the spiders is currently still moving higher, a down day today. Put this on a 3-month graph, a down day today. But overall, look at the move of the S&P 500 moving up above the 20-day exponential moving average as a good sign from a swing trade perspective on the S&P 500. Big down day today though, but still above the 20-day. One day does not make a trend. One day does not make a trend. Let's go look at the VectorVest Composite. Also above the 20-day exponential moving average. Down day. Earnings on the VectorVest Composite definitely running higher. Volume pretty steady day over day. But that's how we look in regards to the news with the consumer confidence, along with the Fed dropping the rate. Interesting that with that, today is just looking like a breather day, but we do have that hammer formation on the VectorVest Composite. We don't have a full bona fide hammer here on the S&P, a little wick at the top, but still could be a possible reversal on both the S&P as well as the VectorVest Composite. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.